Learners, welcome again to our session, a continuation of what we were doing earlier on. Recall, in our last session, we had introduced the concept of a tax investigation, and majorly we had talked about the concept to do with definition, events, and also the main terms like avoidance, evasion, and tax fraud. In our session today, my good students, we are now digging deep into this concept. And the concept that I want us to understand today, it is known as what? Backduty case and in-depth investigation. Backduty, and in-depth investigation. That's a concept that I want us to understand today. That is a backduty and in-depth investigation. So we are talking about backduty and in-depth, backduty and in-depth investigation. That is what I want us to understand today, backduty and in-depth investigation. So when we are talking about in-depth investigation, my good students, or rather backduty, this is where we are talking about backduty. What we must be able to always have at the back of our mind is that backduty basically is a general term that is used to refer to the assessment and collection of all kind of taxes in arrears, to the collection and assessment of all taxes in arrears. A very important term that you must always have at the back of your mind. This is what Mwalimu is saying. Mwalimu is saying that backduty is a general term used. This is a general term used to refer to the assessment and collection, of all kind of taxes, of all kind of taxes in arrears, This is what you're terming it as a backduty, a general term used to refer to the assessment and collection of all kind of taxes in arrears. And at this point, you'll find that the taxpayer, at this point, you are saying that the taxpayer is considered to have committed an offense. The taxpayer is considered to have committed an offense, which should be dealt with as a backduty case, and it may attract a component of penalties and interest as well. At this point, you've not been filing your returns for a very long period of time. And probably at this point, or rather you've just been kind of evading taxes for a very long period of time. Now, at this point, we want to do this assessment of all the taxes in arrears. That is what you're terming it as, backduty. And as such case, you'll find that such arrears will always attract aspect to do with penalties and interest as well. They will attract a component to do with penalties and interest as well. So the big question you'll find that we can always tend to ask ourselves, even as we are operating our business, is at what point, or rather when will these arrears occur? When will these arrears occur? So the arrears will arise normally under the following conditions. These taxes in arrears will arise normally under the following conditions. Condition number 1, talk about under declaration of income. Under declaration of income, I'm disclosing less than what I'm supposed to disclose, sorry. Talk about non-declaration of income. Non-declaration of income. talk about claim of expenses and allowances that a taxpayer is not entitled to. Claim of expenses and allowances that a taxpayer is not entitled to, that a taxpayer is not entitled to. So these are some of the items that we consider as what? As circumstances which might kind of what? Which might kind of lead us to have these taxes in arrears. Now, the moment you are able to understand that concept, you will find that we are now kind of building the foundation for us to understand the whole concept of what? Of talk about back duty case. So the other key element will be, how will we determine the income in a back duty case? So determination of income in a back duty case. So we are talking about determination of income in a back duty case. So in this case, that should take us to determination of income. Determination of income in a back duty case. In a back duty case. Determination of income in a back duty case. Determination of income in a back duty case. So that is what we should be talking about. So the first thing, because at this point, remember, you are engaged as a professional accountant to conduct a back duty case. So at least at this point, you must be having the knowledge of financial accounting. And that's why I normally tend to say that anytime you are handling this concept more so for professional course, let our focus always be on practicability part of it. Let us always tend to focus on what is happening for the purpose of us getting this knowledge to apply it in a practical environment. Rather than just doing exams, let us always tend to get this knowledge and concept for us to apply it practically. So, number one, we are looking at determination of income in a back duty case. So, what we need to do, number one, is understand the principles involved in the computation of correct net profits. Understand the principles involved in the computation of the correct net profits from income and expenditure accounts. Incomplete records, records of bookkeeping, and in the statement of affairs. So basically, we just need to have the principles in computing the correct net profit. And that is very vital. That is step number one. Not per se step, but what we need to do as step number one. Talk about number two, accurately determine the person's capital at the beginning of the year of income and at the end of the year. Accurately determine the person's capital at the beginning of the year and at the end of the year. And you know very well how we normally tend to determine our capital. Capital, of course, is always equal to what? Assets minus liability. That will give us what is known as what? Capital. Asset minus liability. So we are saying that we need to accurately determine this person's capital at the end of the year. Number four, we've talked about number two. We've also looked at, that was number two. Number three, concept number three. From the results obtained, of course, from the results of us getting that capital, from the results obtained, you will be expected to have a good knowledge of allowable expenses and disallowable expenses, taxable income and non-taxable income, and non-taxable income, and non-taxable income. From whatever that we've obtained, we will be required to have a very good knowledge when it comes to allowable expenses, non-allowable expenses, taxable income, non-taxable income, and those incomes that are exempted from tax. You just have to have that knowledge very well. Then talk about number 4, what we will be required to do. Number 4, where arrears of tax are involved. Now we've determined and we've seen that we're having arrears of tax. This is what we are saying, that where arrears of tax are involved, where arrears of tax are involved, where arrears of tax, where arrears of tax are involved, where arrears of tax are involved. We are saying that where arrears of tax are involved, the amount of normal tax payable can be ascertained. Where the arrears of tax are involved, the amount of normal tax payable can be ascertained either by self-declaration, which is acceptable, or by means of a capital statement, or by means of a capital statement, especially where sufficient reliable accounts cannot be produced. Especially where sufficient reliable accounts cannot be produced. So we are looking at this scenario, my good students, that at this point we've determined that we do have arrears of tax. So we have one way of reporting correct amount. And at this point you're saying that number 1, which is also acceptable, that we can give you a chance again to do a self-declaration. And in this case, you must prove and bring correct returns, or rather correct state of affairs. Or alternatively, what you can do, we can prepare what is known as a capital statement. Basically, a capital statement will give us a clear picture of the accurate taxable income that we'll be having. So that is what we are talking about. What you need to consider anytime you are looking at what? Determination of income in a Backduty case. And of course, looking at the last step, at this point, remember, I'm suspecting you that you've not filed the correct returns. I'm having 2 options of either giving you a chance to disclose the right figures, or me taking that initiative of determining the accurate figure in your business. Of course, we'll go with the capital statement, because if I've suspected you on the first case, how sure am I that the next time you're going to disclose correct returns? So we'll have to do, or rather we'll have to prepare what is known as what? A capital statement. So the big question is, what is this capital statement that you are talking about? So that should take us to what is known as what? Capital statement. So that should take us to what is known as capital statement. That should take us to what is known as capital statement. And I want us to understand what this capital statement is. So looking at capital statement, looking at capital statement. I want us to understand what capital statement is. So anytime my good students will be talking about capital statement, you'll find that a capital statement consists of details of assets and liabilities of a taxpayer at a given date or time, at a given date or time, which shows increase or decrease of a total worth of a taxpayers by taking into consideration the capital expenses, living expenses, talk about personal expenses. So in a very brief statement, anytime you're talking about capital statement, you are showing that it is a statement that is going to disclose all the assets and liabilities of a taxpayer at a particular period in time. And it will show the taxpayer's capital expenses, living expenses, talk about personal expenses. It is going to disclose all these items. It is going to disclose all these items. Now, the big question is, how will we prepare our capital statement? That is the next question that we're going to ask ourselves. How will we prepare our capital statement? So that should take us to steps in preparing capital statement. Steps followed in preparing capital statement. So that should take us to steps followed in preparing capital statement. Steps followed in preparing, steps followed in preparing, steps followed in preparing capital statement. Steps followed in preparing capital statement. Steps followed in preparing capital statements. Steps followed in preparing capital statements. Number one, step number one, we are saying that ascertain all the assets of a taxpayer. Ascertain all the assets of a taxpayer, whether tangible or intangible, whether tangible or intangible, business or non-business, business or non-business, by determining their value for a given period on an annual basis. So number one step, my good students, you are saying that we are going to ascertain all the assets of a taxpayer, both tangible and intangible, both business and non-business, for a certain period. That is step number one. Step number two, we are going to ascertain the taxpayers, all the taxpayers' liabilities, both business and non-business. That is our step number two. So step number one here, we've said that, step number one, we ascertain all the taxpayers, all the taxpayers' assets, both tangible and non-tangible and intangible, business and non-business. We ascertain all the taxpayers, liabilities. That is, of course, both business and non-business. Step number three, deduct all the liabilities from the assets for each time period. Step number three, deduct, of course, you say deduct all the liabilities, deduct all the liabilities of the taxpayer, deduct all the liabilities of the taxpayer from the assets for each time period in the year. For each time period and year. For each time period in the year. That is number three. Number four, compute the growth in asset by comparing. And I repeat that again. Compute the growth in asset. Compute the growth in asset by comparing compute the growth in asset by comparing, compute the growth in asset by comparing the net assets, by comparing the net assets, by comparing the net assets, by comparing the net assets of the year with the previous year, of the year with the previous year, with the previous year. My good students, this is what Mwalimu is saying, that for us to determine this growth in net asset, this is what we are going to do. Assuming in 2018 we had the difference which gave us the net worth, assuming in 2018 we had a net worth of, say, 200,000. In 2019 we had a net worth of, say, 300,000. In 2020 we had a net worth of, say, like 2020 we had a net worth of, say, 350,000. So for us to determine our growth according to Note 4, we are saying that if I want to determine the growth in 2019, we are going to take the net worth in 2019, we deduct that one in 2018, meaning that the growth in net worth, we should be talking of 100,000. If I want to determine the growth in 2020, we are going to take the net worth in 2020, we deduct that one in 2019 to give us 50,000, which will give us what? The growth in net worth in 2020. So basically, that is what step number 4 is telling us, determining that component of growth in net worth. Okay? Then talk about step number 5. Deduct any non-taxable income that was used to finance the growth in assets. We are saying that step number 5, we need to deduct any non-taxable income that was used to finance the growth in asset. And this non-taxable income in this context, the one that we'll be talking about, will be what? A good example of non-taxable income that we're talking about here, talk of maybe we had inheritance, e.g. inheritance, for example. Talk about inheritance. Talk about maybe donations from friends and families. Talk about capital gain, etc., 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 etc. So that is step number 5. Step number 6, my good students, we are going to say, step number 6, add to the growth in asset all the taxpayers' living expenses. Add to the growth in assets, add to the growth in, step number 6, we are saying that we add to the growth in asset, we add to the growth in asset, add to the growth in net assets, or rather the net worth, add to the growth in net asset or net worth, all taxpayers, living expenses and personal expenses. All taxpayers, living expenses, e.g., for example, you are talking about living expenses such as billings, e.g., talk about billings, that is water bill, electricity bill, talk about taxes, etc., etc., and personal expenses, and personal expenses, such as, and personal expenses, such as maybe talk of salaries, talk of harambes, etc, 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 etc. So that is what you are talking about in note number 6. We add to the growth in net assets, the net, that is our living expenses and personal expenses. Now, after we have talked on that case, that should take us to step number 5, or rather step number 7, which is the last step. And on that case, you are going to know the following. We deduct capital allowances. We deduct capital allowances. Deduct capital allowances from the total arrived above to arrive at the taxable income. We deduct the capital expenses from the total that we have arrived at this point to arrive at our taxable income. To arrive at our taxable income. To arrive at our taxable income. So these are the main steps that we must always tend to consider and follow anytime we are to prepare our capital statement. And before we look at any question in our past papers, I'll want us to have a format of a capital statement, how a capital statement looks like. And the beauty part with capital statement, my good students, under tax investigation is always very simple. We'll just be copying and pasting. That's the beauty part with capital statement. So looking at our capital statement, we'll always be talking of this case. We'll just be following our steps. So we are looking at the format of a capital statement. So this is the format of a capital statement. Format of our capital statement. Format of our capital statement. Assuming I'm having any person, say I'm having this person known as M. Darasa. We're having M. Darasa. Capital statement. We're having M. Darasa capital statement. For the year ended. For the year ended. For the year ended as follows. For the year ended. In this case, we are talking of, we can take like 4 years, maybe talk about 2017, 2018, 2019, and 2020. So this is what we are talking about. 2017, 2018, 2019, and 2020. So step number 1, we say that we ascertain all the assets. So we are going to take all our assets here. And remember, these will include both business and non-business. And non-business. And non-business. We will be having it at that point. We will be having it at that point. Consider all our assets at that point. The next thing to consider, we are going to take all our liabilities here. So we are taking all our liabilities. Of course, again, business and non-business. We add, or rather we deduct our liabilities at that point. We deduct our liabilities. So that as at the end of the day, what we will be having, we will be talking about the net worth. We will be talking about the net worth. Net worth. So having our net worth there, having our net worth at that point, the next element that you are going to do is to determine the growth in net worth. Is to determine the growth in net worth. So looking at our growth in net worth here, talking about growth in net worth, we should be talking of whatever that we did here. Like if it is the growth in 2019, or rather 2020, I'm going to take the net worth in 2018. We deduct that one in 2017 to give us that. 2019, the same case. We take the net worth in 19, we deduct the one in 2018. 2020, the same case. We take the one in 2020, we deduct the one in 2019. After we are done with that case, the next element to consider is we are going to less non-taxable income. Non-taxable incomes. Such as what? Maybe we had inheritance. Inheritance. We are going to have it there. Maybe we had, say, like donations from families and friends. We'll be talking of donations from families and friends. Remember this case, we are doing what? We need to deduct. All these components, we are deducting. We are deducting that. Consider the next bit here, whereby you are going to add, we've said number 1, personal expenses. And what? Living expenses. And living expenses. And we've given example of personal expenses. And also we have what? Our living expenses. You also have our living expenses. So that as at the end of the day, we should be talking of that. Should be talking of our living and personal expenses. So that we should be having our total here. And our total we are going to achieve by summing from the growth in net worth, summing from the growth in net worth, summing from the growth in net worth. So that as at the end of the day, whatever figure that I'll be having here, what we are going to consider is the component of capital allowance. That is step number 6, or rather step number 7. We add to the growth, we add to the whatever that we determine there, our capital allowances. We deduct that capital allowances, not adding but deducting capital allowances. So that as at the end of the day, whatever figure that I'll be having after we've deducted our capital allowances, that should give us our taxable income. That should give us our taxable income. That should give us our taxable income. So these are very simple steps that we need to consider anytime we are preparing our capital statement. And that is how our capital statement will look like. So in our next class, my good students, you're going to meet and handle a question from our past paper, which is also going to open our mind very wide when it comes to capital statement question. It's always as simple as that. You just copy and paste the figures. So to that point, thank you so much, and let us meet in the next session. Thank you.